Welcome to the Random Forex Trader 2022 and beyond, episode 17. Let's go to the charts. Now, this is going to be a longer episode because we did have a recovery process we had to go through, and also there's a little bit of a delay between the last episode and this episode because I just wasn't able to get in and record. However, I do have screenshots and we have all of the data in the account history. I'm going to show you exactly what happened. So let's go back and talk about the trade that was taken in the last episode and also the episode before that because we were running two trades. So our very last trade was NZD CAD. And before that, we were holding on to a trade that was in drawdown, which was NZD JPY. So let's look at the account history right now, and I'll show you that the NZD CAD trade right here, taken on the 23rd, went into profit, and you can see I did not set a take profit. So in the comments, it says nothing. If you look at the trade above this, it says TP. That means I set a set and forget take profit. However, on this one, I manually took profit because I was actually going to use some of the profits from this trade to help offset a potential loss from the next trade we took, which was NZD JPY. However, I did not do that. I manually took a profit at $41.82. Now you can also see that the NZD JPY trade closed out, and I ended up needing three trades. And I'm going to show you the specific mathematics there. The original trade was a $157 loss, and then the next two trades I had a $50.84 profit and a $129.42 profit. Let's first look at the mathematics and the end result of this, and then I have screenshots from my mobile device where I took screenshots as I was entering this hedged Forex recovery trading process, where I hedged out of and recovered out of a potential loss, and we went into a net profit. So let me show you the mathematics on that. Right here it is. And again, you'll have to watch this entire thing to then see what my thinking was and how I arrived at these mathematics. So mathematically, trade number one went over $100 into a loss. So it was $157.89 loss. Okay. But not really a loss, so watch my mathematics. I then went into two more trades, and I'll show you exactly what those were. So trade number two went into a $50.84 profit. Trade number three went into a $129.42 profit. That's a profit overall of $22.37. We had fees that equaled $10.15, so it gave me a net profit overall of $12.22. Not a lot, but I wanted to get out of this. And again, focus on net profit. Yes, I had to take a negative, but I had two very positives that were more than the negative, and more being $12.22. So this overall trade was profitable. Technically, on paper, I took a loss, but net profit, and that's how I look at it. I did not take a loss here. I hedged, I recovered, and I got out of this potentially gone wrong random trade, and I got out in a profit. Now, let's go look at some screenshots, and I'll show you more of what my thinking was because it's a very unique process that I use, and I'll be able to explain it better if we look at screenshots. So here we are, the hedged recovery process, no net loss Forex trading. Now, here are three consecutive screenshots of what was going on. I'm going to have to zoom in and probably draw some circles and images for you to see because I have a black background on my mobile device. But from left to right, screen image 1, 2, and 3 as the price progressed. You can see over here on the left, my original sell at 0.1. It's basically at the bottom of the screen. And below that, I have an indicator called the RSI or Relative Strength Index, and I have it at a setting of 4. If you can see that, standard RSI setting is 14. 14 is not as sensitive as 4. 4 is very sensitive. However, the concept, if you understand RSI, and if you don't, I'm not necessarily going to teach RSI here. You can go look at YouTube videos, and maybe I'll give you some references in the description field to go look at how the RSI works. But it's basically, for all intents and purposes, an overbought or an oversold indicator. That's not 100% accurate, but let's think of it that way. So again, you can see the sell trade, the original, and the price went against me. We're looking at the 4-hour chart here so we can see some real price movement. And then I did a hedged buy, and equal and opposite trade to immediately stop my loss affecting my margin. Margin is the key here. If my margin gets down to 70%, the broker shuts my trades down at a loss. There's nothing I can do about it. However, since I hedged an equal and opposite trade, I have a buy at $1. I have a sell at $1. It's not bleeding my margin away. I could hold on to that trade forever and it wouldn't affect my account. And it's certainly not going to blow out my account with this type of hedge because one counteracts the other. You'll notice that my buy trade, my equal and opposite hedge, continued to go in the buy direction. However, because it was a hedge trade and it's an equal and opposite, it's not really helping me no matter how much profit it's making. What I needed to do was make a decision and either do another buy or sell, and probably a pretty aggressive one like I did, based off of what movement is going on in the market. Now, technically, I could have went into a buy here, realized that it was going to continually go in the buy direction, which again, you don't really know. And I could have done an immediate second buy at a higher lot size and probably got out of the trade a little bit earlier. But what I like to do, instead of just guessing once I'm concerned about the third trade I'm going to go into, I want to make it the most profitable I can, which has the most likelihood of winning. So you'll notice in screenshot number 1 here on the left, I was looking at the RSI 4 and I realized that the line was way over 80%. I mean, we're at about 95% overbought. And what that means is, not all the time, but most likely the price is going to come down. So if I know it's at the top here and it's going to come down, I'm going to do an aggressive trade in the direction that the RSI 4 tells me is most likely to occur. However, here's what's interesting. If you look at the history, even now, if we look at NZDJPY days later, it's still on an uptrend. However, look how I won this trade with a sell. I did a counter trend short-term sell. Now, why did I do that? Look what started happening. This green candle on screenshot number 1 here did a really serious push and it has a huge wick at the top. The RSI is showing me that it is overbought and that the price is going to pull back. So what I did is I capitalized on that really short-term pullback, even though the price, like I said right now, is continuing to go up or go long, as they would say. I simply wanted to get out of this trade really fast, so I did a short-term play. You can see in screenshot number 2, the one in the middle here, that the moment it started dropping, I did a sell trade. In fact, what's nice about that, if you look at screenshot number 1, I did a sell trade right at the top when that wick was pushing. Because we were already, if you look at the RSI down below, the RSI 4, we were already way into the overbought. We were going to get a pullback. And then look what happened. You can see by screenshot number 3, I've already got out of the trade because it moved enough. I did a 0.5 bid, which was 0.3 over what my total already was. 0.1 and 0.1 equals 0.2. So I was 0.2 in my hedge total. And then I did an additional 0.3 to go into a sell trade, very temporary movement, sell trade at 0.5. It pulled back, and that's where I took all of my profit and I got out. Now, let's take a look at it here. Here's what I was seeing on my mobile device. Once I seen the first trade, the NZD sell that we went into, that's $157.82 in the hole. My hedge trade was a buy at 0.1, so that went $50.30 profit. And then I did that aggressive, interestingly enough, not in the direction of the trend, but that aggressive temporary move, that pullback that the RSI 4 was showing me was going to happen. I did a 0.5 sell pretty quickly. This all happened in about 30 minutes. It went to $132.17 profit. If you look at the top, we were in a total profit of $14.50. I decided I'm getting out. The screenshot on the right shows the actual numbers once I was able to hit the button and get out with a total profit of $12.22. I don't care what anyone says to me. That is not a loss. I had to take a loss of $157, but because I had a $50 profit and $129 profit, it gave me a total net profit of $12.22. That's how I trade. And again, remember, This is the Forex Random Trader. I'm taking random trades, and this is the only trade up to this point that I've had to recover like this. Each recovery process may be a little bit different. For example, I seen that pullback happening. I took advantage of it. Sometimes you'll notice we had a original losing sell trade. I did a hedge, a buy equal and opposite. That stopped my margin level from bleeding off and affecting my account. And then what I could have done, and I said this earlier, now I only could have done this because I have hindsight right now, and I look back and we can look at the live chart, which we will. It's still continuing to go up. What I could have done after that original hedged buy 0.1 trade, I could have done another buy at, let's say, 0.5 or certainly something higher than the total amount I was already in, which is 0.1 equaling 0.2. I would have done an immediate buy trade right after that, and I would have won this trade again. So either way, I did the short-term pullback aggressive, or I could have done a buy hedge and then another buy at a higher lot size, and I still would have won this trade. So I'm interested to hear your feedback and your thoughts, and I'll bet you a lot of what's happening here, if you don't agree with what I did or you don't like it, it's probably what I call all the time a mind virus. Someone else has told you that having a stop loss is the way to go. It's not. I don't do it. I can manage this all on my mobile phone after taking the trade. Obviously, you know, we do that on my VPS server, my Windows computer in the cloud, but I monitor it all on my phone. And in fact, I was out to dinner when I looked at this, did my hedge trade on my mobile device, canceled it all out in a $12.22 profit, and I'm ready to move on, and we're ready to do the next random Forex trade. So let's do it. So here we are back at the chart. We've made a total of $549.67. No net losses. No losses. And what I mean is no losses on our initial deposit. That's truly the key to me. Now, if we look at this visually, up here in this blue box area, just to the left of it is where we entered that sell trade. And you can see right now, this is the live chart, that trade continued to go against us. Now, this red line here is when I started to intervene. This is where it went against us. And then I used this area right here, this simple little pullback with the RSI 4. You can see it down below here. As soon as that thing pulled back, I started doing a sell, and we got out of the trade right there in that area. And it's very simple, even though the price kept going up. So there's really two ways to get out of this. Do your hedge trade and then an initial buy because the price is going up, or do your hedge trade and wait for something a little bit more accurate in my eyes, other than it just looks like it's going up. The RSI 4, I really like it. I did a counter trend recovery trade and it worked. And like we seen earlier, that other trade, NZD CAD, I just looked at it. It was a $41.82 profit. I took profit and I focused on recovery. So let's go back to the trade panel here and let's go pick our next random trade and enter it right now. So here's my spreadsheet of 28 currency pairs plus US 30, and I doubled it, so 58 total. Each one has a buy and a sell next to it. Let's go ahead and copy this. And now we'll go over to random.org, go to the list randomizer. I'll paste it into the box, randomize, and our very next trade is CAD Chief Sell. CAD Chief Sell. So here we are on the charts. I'll open up CAD Chief. Here it is. I'm going to drag it to the active chart, and I'm going to immediately hit sell. Absolutely random. We're in a CAD Chief Sell. Now, let's get rid of the market watch window here. And let's kind of analyze what we're looking at here. So I'm on the 4-hour chart, and the price is going up. So this might be a good one for us to trade with. I'm going to go ahead and get rid of this red line that I used for the last analysis. And so the price is going up. However, it's in a temporary pullback, and it's also at the top of the RSI 4 down here. So potentially we're going to get a pullback, and we're going to go down to a lower time frame here and set our take profit. So we might be in a good position here. So let's go down to like the 15-minute, and we see that we're getting a temporary pullback. However, probably not going to get a lot. Here's what I'm going to do. Since it's a sell, I'm going to drag right down to, let's go down to the bottom of this really long candle right here over to the left. okay, and see if the price comes back to that. And if I hover here, you'll see that our profit would be $14.85. Let's kind of leave it there for now. And let's see. I'm suspecting that this will probably go against us because it's in an uptrend, but we'll see. Let's see. Now, I may do this off screen, off video, whereas if I see the price is actually really coming down even farther, maybe I'll drag my take profit down and just take more profit. We'll see what happens. You'll definitely get to see in the next episode. But again, leave me some comments below. Ask questions if you need to about the hedged recovery process, because I know a lot of people were making comments about that and saying, Terry, this is boring. You need to show us the recovery process. Well, I just did. It will be slightly different every time, but conceptually the same. And I also have said, why do I need to do the recovery process if I don't need to do it? I know it's a teaching example, but also the point was, I may not have to do that very often because we are doing random trades and we've been profitable every trade. I hope that changes your mindset about how Forex works, what you can really do, what everyone else is showing you, because I'm doing the opposite and it's worked really, really well. So we're going to leave it there. We're about in a $3 drawdown right now, but we just entered the trade. So let's let this play out. This CAD Chief sell will play out and we'll look at it in the next episode. Until then, I'll see you there. Whether you're brand new to Forex or you're still struggling with which trading strategy actually works, the good news is you never have to manually trade Forex ever again. No, this is not the latest and greatest robot or expert advisor. This service sends you profitable trades daily, and you have full control of how many trades you receive and how much you bid. The take profit and drawdown recovery are all built in. For the ultimate in Forex trading automation, visit forexbits.com today.
If you found this video of value, please by all means click the like icon and subscribe to be notified of future videos designed to help you get profitable in the Forex market. If you would like to never manually trade ever again, I highly recommend you get access to all of my profitable trades that can be sent directly to your MT4 account daily. Simply visit forexbits.com and learn all about this new and unique service. That's all for this episode. I'll see you in the next video. Ta-ta for now. Thanks for watching this episode of the Random Forex Trade series. Be sure to subscribe and stay up to date on the Forex Random Trader series success. Leave a comment and like below to be entered to win the copy trade service free for life. Visit forexbits.com for more. I'll see you in the next episode.